Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Other indicators you can use, you want to be careful of, because a problem that a lot of traders run into when they're adding indicators to their charts is that they get a little bit carried away. No indicator is going to work all of the time, as any of you are probably familiar with if you tried to find that holy grail. They're going to have situations where they work best, and really the best way to learn how a situation is going to play out as it reacts to an indicator is just to see a security and an indicator in play over quite a long period of time. Usually, it'll probably take a couple of years to really strongly have confidence in any indicator that you're using. That might seem like quite a long time, but it's still going to be the case. You can learn how to use indicators in a very rapid amount of time, but to really start to specialize in them, it's going to take time. So the more indicators you try to use, the longer it's going to take, especially if you start to play around with a lot of different indicators on your charts all at once, because you're going to have a lot longer learning curve than you would just using one or two. Does anyone have any questions so far?
Guys, why don't you type some questions? And Toni, I guess I have a question. So I guess the gist of it is that you believe that the rate of change is very, very important. So when it starts to moderate, that gives you an idea that you might need to shift your directional trend. Is that sort of the gist of what you're trying to say?
Yeah, basically what I focused on in this class is just looking at how those momentum moves come into play in establishing larger term objectives. If you go back to like this chart, for example, here, and you're looking at the rate of change, when you're looking at how fast a move comes out of a previous move, that's going to help give you an idea of whether you're going to get strong follow-through on a setup or it's going to be more gradual follow-through. Let's say, for example, you're trying to time a reversal strategy, and you're looking at something coming off of a high. If you had a strong momentum move coming off of the high where the momentum shifted and it tried to establish slightly higher highs, usually it's going to be able to create a stronger pullback and lead to those larger target levels than something that creates just a V pivot off of a high. We saw this V pivot over here where it had that high where it pivoted very quickly off of the high, but it wasn't able to sustain that downside move. And that's because not only was that upside move more rapid than average, but the correction itself was also more rapid than average. Sorry about that.
Don't you think this is, I'm sorry.
And oftentimes, if you have this stronger rapid move coming off of a V high, if this is a larger move here, it could even fall into a trading range and eventually continue that previous trend. So it might not serve as a real reversal of a larger trend. It might just serve as something that leads into a corrective move before that trend then continues higher. So it's really important to pay attention to pace to really have an idea of what is your potential on that strategy. Are you going to be able to get a test of even a previous low, or are you going to be able to have a stronger reversal? If you go back and look at this class in addition to the previous classes, you're going to get a little bit better of a feel for it, because in the previous classes I spoke of things such as trend development and a number of other building blocks or tools that go into establishing price moves and as well as understanding corrective moves and such like that. Hold on a second here, guys. Whereas in and of itself, just looking at pace is not going to give you quite the full picture, but it is one of the most important tools for being able to establish target levels and objectives accurately.
Toni, don't you think this was a very unusual case? At least I remember dollar euro, and there in December, I see what you're talking about. That the pace definitely shifted. Actually, in November, when it looked like it was stalling a bit. But don't you think it's unusual that it fell all the way back from 80, roughly 80, down to 69, and then rallied all the way back to nearly 80 again? Do you see that in a normal situation?
Actually, yeah, this is something that does happen quite a lot, because let's actually go back here and look at even the larger time frame here. If you remember, we were giving a class back in that November at the Las Vegas Expo where we were looking at correction in the dollar. Basically, same type of idea. We were looking at some sort of pattern that would create a longer-term reversal or longer-term correction in the market or in those currencies. And at the time, we were looking at things such as double tops or triangles or something else that would help shift and lead to a larger correction. The fact that it broke all the way down to here had to do a lot with the fact that the momentum shifted up here at this high. If we hadn't seen that momentum shift, when we were looking at that correction and the potential for a correction back in November, it wasn't necessarily clear that we were going to see a correction that led all the way back to this zone of support. But because the momentum was able to shift as it turned off of that high, that allowed for that larger correction. And this is something that is actually quite common when you have this type of momentum shift, but it's not necessarily something that's very common when you have this type of sharp rally. This type of sharp rally is more often going to correct through more of a trading range or a slower, more gradual pullback. And it kind of evened out to do that by falling into this triangle here, and that was its way of kind of regulating that extreme reaction to start with, where it then formed that longer, more normal type of correction to this extreme momentum surge here.
Yeah, that makes sense. That makes sense. I mean, it's such a big
So yeah,
move,
going into it, there wasn't really a clue that you would get this sharp of a correction. It's just the fact that the momentum shifted at that high that allowed it to break so quickly.
So you might consider buying, when you're there at B or C, you might be looking at buying a downside put because you thought it would break, maybe not down to that 69 level, but you would have been somewhat confident that it would get down to 76, correct?
Oh, yeah. I mean, remember, if you recall the class that we gave back on the dollar, and I know we're looking at the euro here, but we were looking at basically the same patterns and the same strategies. So we were looking at least some sort of correction to retrace this move. Usually, with a strong, rapid momentum move like this, it's going to correct at least about a third of that previous move higher. A third is pretty normal. So you would have expected probably around the 75, 76 level at least. And since there was this support over here from that price as well, that zone would have been a pretty strong kind of magnet for it.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.